Let's take a closer look at the financials of PEXA Group. Could there potentially be a breakthrough in this stock? It's software. We know that it can be exponential growth in certain terms, and it's certainly priced that way. If we look at the very high priced earnings ratio of 144, this clearly signals that the market believes it will continue to grow very rapidly, and that's why it has this valuation right now. Although the stock is down 25% since IPO. So this is an Australian company, and they're in the settlement business, doing the digital settlements of land transfers, collaborating with lawyers and other parts in the sale chain of these properties. And taking a look at pricing options, we see that it's indeed quite consumer friendly. They take away risk. They don't charge upfront registration fees or ongoing subscription fees, only for successful deals. I think this is a good, sound business concept. It takes away anxiety and the fear of a loss from consumers using the product. So this is definitely some sign of good management. I read the article on Simply Wall Street commenting about the potential for the higher than average growth in this company, that it could be a result of this. Well, maybe we see some sound business practices already when we just look at the website. Although there are some storm clouds. Take a look at these financials, and we see that the recent quarter saw a decline in revenue. Although, if we zoom out a little bit and we look at total revenue from 2021 here to 2022, we can see a substantial increase, and we can see that the cost of revenue is increasing way slower than total revenue, and this is indeed resulting in greater gross profit and greater operating income as a downstream result of this. So we can see that this type of scale is beneficial for the company. The fact that they quite recently became profitable here on a per share basis, and this is something that we can see has the potential to scale. So we see, all right, slightly negative earnings per share here for the period ending 2021, and then slightly positive. Although since this date here, we can see just about, okay, so for the full year 0.12, we see about 0.1 for just the recent quarter. This is quite a substantial increase in profitability indeed for this company. It's a good sign, but what's going on with this negative growth? Is this a result of the chaos that we see in the housing market? Is PEXA indeed in line to take advantage of this current market trend to grab more market share, to drive more adoption, and then come out stronger in the other side? Only time will tell, but for now, what we can view in this still build, because that's what financials are, it's a snapshot of the current state of the business, and what we can see is a company being priced for extreme growth by the market. We see a company that's just turned profitable. We see a company that's at a crossroads with potential for big gains and potential for great losses. We see a company with a small market cap. This is also influential. If it's a small business, it can grow a lot faster than one of those big established ones. So that's interesting. And I think that Australians are in the perfect position to follow along here on the developments in the property markets with land, what's going on with the economy here, and see these digitization initiatives that are being pushed by the Australian government to go away from paper form, and to see which player is grabbing the majority market share, which player will get a dominant position. and be able to extract more profits from this process in the future. Will it be PEXA Group? Only time will tell. But for now, I can say one thing for sure. I'm putting this company on my watch list. Alright, that's been it for this video. And as always, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.